All right, traders, today is January 8th, 2024. We're going to talk about the rubber band candle and the 2-hour bearish cross. So let's take a peek at it. I'm going to go to the dollar index chart. Now, for me, first, I like to find a trend or a moving average. So you can see here is a trend here for the uptrend. And you can see right here, this would be the extension of this uptrend line. And you can see here is a stretch of this uptrend line. This would be the spike of it, this red candle right here. See that spike of that uptrend line? And then you get that first clean candle that breaks below the low of this. That becomes the rubber band candle. All right, so you've got a stretch of the uptrend line right here is the first one. And then the next candle that breaks the low, that becomes the rubber band candle. After breaking the rubber band candle, in my view, the uptrend falls apart. And if you notice, it doesn't fall apart. It acts like rubber, and it just like a rubber band and slings price back up over the uptrend line. You see that? That would be the rubber band candle, that red doji candle right here. And then you've got price fails to break below. It may break below by like a couple pennies, but as you can see, the market forces take over and they sling price back up to the other side. All right, and then they consolidate in a bull flag right through here, failing to make a higher high because this was the high. And then here is the first attempt, second attempt, and then the third attempt, failing to make a higher high. And now you see price come down. This is a daily chart of the US dollar index. Now, we had another scenario a couple weeks ago. We have a flat 200 period moving average. Now, the 200 SMA is a very respectable moving average. I mean, think about it. If there's, I'm not for certain, but I think there's like 265 trading days a year. I'm not positive. I think it's around that number, maybe 250, 240. I don't know, but I could definitely do the research on that. But irregardless, that's what makes the 200 a respectable moving average, because it encompasses such a large amount of time into it. So it would encompass 200 daily candles, the average of 200. So it becomes a very respectable moving average. And this is the simple moving average. Now, as you can see, price failed to make that higher high, and then it begins its journey down. And you can see each time it's made, comes down, and then it comes down, and then it enters the flat 200. And for the very first time, there's a knee-jerk reaction, and it sends price back up to, I don't know if that's the 50, that's the 100. All right, sends price back up to the 100, and then we come back to level out on the 200, and then they proceed to make a lower low. So this would be the rubber band candle there. Now they break the low of that rubber band candle right there, and then they start a new trend, but then they fail to make, you can see right here, they got into minor support from a previous consolidation right through there. And then they bounced back up to the 200, all the way back to the downtrend line. Then we start a huge spike candle. And then another one. This one becomes the new rubber band candle. So breaking below the bottom of this, and things start to fall apart. All right, so you can see here we come in, and instead of bouncing back like the rubber band would, notice we hang out a little bit too long, and that rubber band kind of wears away. And then you can see now price trades below the bottom of that rubber band candle, breaking the possible retraction back up to the flat 200. What we want was the flat 200 to hold price and sling it back up here, up into the, the 105, the 106, the 107 area. But it didn't. So instead, it's pierced once, twice, and then we bear flag, and then we break through the rubber band. And of course, that's when we got the FOMC rally. And you can see as the price of the dollar index comes down, it makes our markets more competitive in the global stage, in the global economies. So our goods and services become cheaper. And when our goods and services become cheaper, we tend to take in more revenue because foreign countries can afford to buy our products and services. And of course, that's when we got the FOMC rally. And ever since the bottom of this, we've had a pullback. And this has been part of our downtrend that we're currently experiencing now. So here's a break of this big rubber band candle right there. Notice it's not the first one. The first one is the spike of the flat 200. And it's one more candle past it. And then after breaking below that, that's when we had our big rally. Okay, breaking the bottom of that rubber band candle. And ever since then, we've had like a pullback back up to here. So now the question is will this downtrend hold price? Now notice each one of these candles right through here is still attached to this downtrend line. So we very well could get a rubber band candle that goes back up towards the flat 200. I don't know if that's going to happen, but we'll see what it wants to do. Right now, we're just consolidating. Believe it or not, we're no longer, this was a bear flag. This is a bull flag. Because it starts from here's the origin of the flagpole. Even though we're under the downtrend line, we're actually kind of negotiating the downtrend line right now. But you can see right here, price goes up and then consolidates in the upper third. So here's the origin of the flagpole, and now you got consolidation in the upper third. So we'll see what happens. And the longer they stay out here, makes it more possible and more likely that we go further up and back into this 200 period moving average right there. So the longer we stay out here and hang out here, makes it more likely that we come back up here to the 103 flat 200. So there's the rubber band candle there. So now let's go take a look at the SPY chart and see if I can get that up. And we'll do another rubber band candle. Let me just take this off. Okay, here's our uptrend line. And on this exercise, we're dealing with an uptrend line right here. And you can see we have a spike. That's the red candle right here, little red doji, kind of indicates pause or indecision. All right, and then you can see we got one clean candle that breaks below the spike candle. This becomes the rubber band candle. It's kind of in a premium spot, being since, you know, a break of this candle is probably likely going to be a break of this higher low right here. You can see if we break below this, the bottom of this candle, we will probably now be in a downtrend as opposed to the uptrend that we're hanging on to by, you know, a candle or so. So there's silver. There's a rubber band candle right there. The uptrend line, the spike, and now the clean candle that broke below the spike right there. So there's the rubber band candle for silver. Take a look at gold. Now gold is just still obeying trend. There's nothing special going on there with gold. It's really just consolidating over to the uptrend line. And that's normal, and it's completely acceptable for gold to trade even bull flag through the uptrend line on the other side. As long as it's holding price up here, that's very bullish. So there's gold. Let's go take a look at USO. All right, so here we are with USO. Now we never got a spike, so this becomes our spike because we fill it in. All right, and you can see price action from the spike gets slung back down underneath the downtrend line. All right, so now this becomes our spike right here, and then we give it one more candle above that. It doesn't look like we're going to get that this morning. It looks like the rubber band energy is going to sling price back down below it. Well, getting some little rapid action. We'll see. So it's going to sling price probably back down below here, or at least start out at the beginning of the day down below here. But I wanted to go back, and so that we don't have a rubber band candle on that one yet. And let's go take a look. We did silver. Let's take a look at UNG, see if we can see one there. And here's UNG. UNG's pretty much doing all the right stuff. Nothing special going on there. Nothing really notable other than the fact that we do have a trend line coming in. And that trend line starts right here and connects right about there. All right, so you can see we're coming into a ceiling of, you've got minor resistance. That's these valleys above us because price is below. So you can see we're getting into those valleys of minor resistance. In addition to those valleys, we're coming into this downtrend line here. Now we broke this downtrend line right through here. All right. But we still have not broken this downtrend line right there. So here we are pulling back to trend. And I would look for a high of probably about 608, 610, maybe even gap fill up to here. 633, you know, this sometime this week. So there's UNG. And I'd look for a possible move up to 633 area. We'll see what it wants to do. Now let's take a look at SPY. Now here's SPY, and here we have the FOMC rally right there. So I pinned my anchored VWAP on this candle prior to the FOMC rally because I want to know what price is doing since the FOMC rally. And then I'll pin another one right here. You can see I got it kind of on the top up here. So here's the high. So you can see price has been pulling away, all right, from the average price of the FOMC rally. So that shows me that this FOMC rally was not all that it's cracked up to be if they're letting price hang out this far below, see, the average, because that's from the anchored VWAP. So this would be the average price right here. Now you can see price came down and was rallied back up away from it, providing a higher high. Price came down into it on the 20th right there, and you can see it rallied up to provide a higher high. And since then it came down, and now it's no longer rallying back up to the anchored VWAP. So all of that value that was supposedly there last month, 30 days ago, I'm just going to call it 30 days ago because it's about the 13th or 14th, all of that value is no longer there. So what has happened to the markets to make them change their direction? I can understand a pullback, but now they've given up all of the value. They're actually saying to you that, that FOMC rally was nothing but bunk. All right, because they're letting price come back down through the average price that they were so willing to buy this for up here and provide higher highs. So right now we have no rubber band candle. It's just price has come down. So we could take a look at this on the daily chart to see where the rubber band candle originates and spikes. So here's the spike of the FOMC anchored VWAP right there, that green doji candle. This would be the rubber band candle right here. See this red candle in the channel? So here's the spike. That becomes the rubber band candle. And now you can see the price action has broke the low of the rubber band candle, therefore snapping the uptrend provided by the FOMC anchored VWAP. And now what we get from there is now we've got lower lows, and now we've got another lower high. So now we could probably sling this back out if I can get a hold of it. I'll just do this. And attach that there. And sling this out to maybe right there. And probably drag this down into there. So there's our trend right there. All right, now we've got a spike here. Are they going to go back up over the anchored VWAP? Because this trend is now broken. So the point is, can they recover from where we are here? Well, they really haven't hit minor support yet, but it'll be interesting what they do. They have broken the low and provided us with a lower low. So they're rallying this morning. It looks like 468.17. We'll see if they can recover 51% of this candle right here from where they closed yesterday. If they can recover 51. So now we're going to take this and put an anchored VWAP right on the beginning of this day right here to see if price action is moving away from anchored VWAP or is moving below anchored VWAP. So we'll take this and go to a 10-minute chart. And we'll take an anchored VWAP and we'll plant it on the beginning of the day. Right there. All right. So if price action gets up over, notice my pivot, 468.10. If price action gets up over this anchored VWAP and begins to go higher, then I want to be bullish. If price action respects this anchored VWAP this morning and begins to trade south, then I want to be bearish. And that's how I form a lot of my SPY pivots in the morning, is looking at the price action. So what we want to see, if you're a bull, you want to see them recover and trade back up towards the FOMC anchored VWAP, which is right now, it's at 470, let's just call it 471.85. And then we've got the high anchored VWAP, which is at 471.36. Now, if you go back to this chart right here and you put it on the 2 hour, and I mentioned this before in a prior webinar, how you can take a 3/8 cross, take the next red candle that trades south, that would be right here. You've got a break right here of the anchored VWAP. There's the spike. There's the free candle on the 2 hour. And then below this 2 hour right here, there's your entry for a 2 hour bearish cross right there. Here's your spike, your rubber band candle, and here you break your rubber band candle, but you start trading back up. You wait for your first red candle, and there's your entry right there. Right there, 473.06, and you trade it until this trade ends, and then you could manage this on the 4 hour chart and stay in it as long as the 4 hour chart, the 3 doesn't cross over the 8, which you notice is going to be probably about 472, 471 or so. So there's the SPY. So there's an idea for trading. A 2 hour cross. All right. You mark off your anchored VWAP. You got your first spike candle, then the rubber band candle, and then as soon as the rubber band candle is broken, there's your entry. But you need a red candle to enter on, because you don't want to be selling into strength. You kind of want to be selling with the weakness. So there you're looking for the confirmation. There's your wipeout candle right there. All right, so there's some ideas on how to trade on a bigger swing time frame. If you're interested, enter on the 2, manage on the 4. My favorite trade is enter on the 10 and manage on the 15. All right. So there is a brief explanation on the rubber band candle. We're going to do another one regarding spreads, and that's coming either tomorrow or Wednesday. I'd like to get it done before CPI comes out on Thursday. All right, the market's open. I'm going to wrap this up. I'll take questions.